This is a follow-on. It's once you've created a scan list and found got a list of stocks that meet your four main criteria: price, volume, uh, what the potential percentage interest rate you could get, so to speak, ATR, and cyclical stocks. You scan for those things. That's what the previous video is about. Now you have a list of stocks that may or may not work with my program. So now we have to go through and find out stocks that work with my program. I wanted to explain to you a little bit more about what the scan results were first. Here's the names of the stocks. This is that ATR. So you'll notice that says 1.37. So that means, I think what that means over the course of a day, the high and low, this stock made $1.37, a change in price. And over here it's a $35 stock. So I think that's roughly 3%. Yeah, I think that's what it means. This stock is 0.5, but the price is only $18. So that's that. This other column shows the volume. Again, we're looking for stocks that are 700,000 or more. At least that's what I do. Look at this stock here. It's 15 million shares. I don't know. This one's 6 million. That's Marvel Comics. Okay. Then there's a thing called the vertical horizontal filter, and what that's supposed to do is help find cyclical stocks. So, for example, this one's 0.5. That's going to be more cyclical than the ones at 0.93. And I used to use this a little bit more, but it doesn't seem like it works that great. But I'm not convinced it doesn't or does, but it seems to help a little bit. And I used to look for stocks that had to be like 1 or 1.5 or less, and so all these are less than that. Okay, so now let's go through. How do we know? I want to show you a little bit more thing. These are like earnings reports. If you click on this, it says there's earnings on 8/20, which is like next Monday or something. And so now you look at this ATR; it's higher. So means there's more. It's more volatile, and why? Because during earning times, prices are more volatile. You look at this one; it's 0.62. The ATR is 0.62. It doesn't have an earning report. When Axel does get close to an earning report, which comes out quarterly, I suspect that this 0.62 will be higher. By the way, I never trade if we're within a day of earnings, like the day before, day after earnings. I don't. It's too volatile for me to trade. Too unpredictable. My statistics go crazy. Okay, so now let's look at a stock. So let's just start out here with AEM. Okay, and let me just say this: I don't scan for stocks every day, nor do I bring up these charts to see if it works every day. I do this about once a week, maybe twice a week at the most. And so the primary thing I'm looking at here is this value here, 8, and this value, 6. Again, this table here, and this here, if you watch this from my videos, you know what these are about, but these are the statistics. And this 8 here says that hidden behind this program, I got all these indicators like MACD and VWAPs and stuff, and it says over this whole 10-day period from left to right, the highest number of hits that it's got for any one single bar, any one single candle is 8. 8 indicators were in agreement. And then that's for stocks that are going up or along. This table is for shorts, and this number is 6. So this is probably a good stock to look at because, well, to start with, those numbers are good. If these numbers are too low, like 4 below, that's too low. 5 is borderline. But 6 and 8 are good. Second thing I look at is the statistics. This one right here, 7 of 9. I really would of a possible 7. Okay, so what I would really like is this to be 7 of 7. And over here, this is 6 of 7. I would really like to be 6 of 6. Okay? 7 of 9 I would not look at all. and I still might trade this stock, but I wouldn't trade it if it was long or going up. This one here, I'd have to look at each day to see why did it fail that one day? Was this day that failed, was it on an earning day, or was it my statistic maybe not been really accurate? But this is saying that it predicted it went down, it would go down 6 times or 7 times. It made 7 predictions, and 6 times it actually worked. So to go to see how it works, again, we're just looking for down trades, predictions, right? So like this. See, it says 2 and 6. 2 think it's going to go. 2 of the indicators think it's going to go up. 6 think it's going to go down. So did it go down? It went down. So that was successful. This is 3 of 3. That means 3 think it's going to go through. So this is really like nobody's really winning. And of course, look what happened the next day. Part of the day it went up. Part of the day it went down. So even that was accurate. This one is 6 and 2. 6 thinks up, and it did go up. So if you look, you see what I'm saying. The second you look going to the end of the second candle to the last candle and looking at the statistics, 4 and 2, and 4 say up, 2 went down, and what happened the next day? Boom, it went up. So you would need to go through all of these to for this to see if the stock works. This one, you're gonna probably find some stuff where it says it's gonna go up and it didn't work. But anyways, those are the things that I'm looking for to see if it meets spec, or if I will trade or not. The reason why I'm trying to be so fussy about this is because after hours, that's your biggest enemy. You buy at the end of the day, down here, and after hours, a whole bunch of things could happen, and you want to be as accurate as you can. So if we put, for example, and we go look at after hours trading, okay, these little gray areas are after hours, so you can see that this gray area, there is more trading than this little guy over here, and these are the days that can kill you. So if we zoom in on that day, that's a Monday, I guess. What happened? You bought here. Okay, so when you're in our trading, you're trading, it's going, these numbers don't mean anything. They don't work in my program or my statistics up here. You can see they're all zeros. But you can see what happens. It goes boom, down, 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 and it comes back up. And during this time here, you're kind of stuck because only order you can put in here is a limit order. You can't put a stop loss. So if the price went up, you could put a limit. I mean, you could put a limit for the case the price went up, but if the thing goes down, the stupid brokers don't let you put in a stop loss or a stop limit even. They let you put a limit if it goes up, but not if it goes down. So it's really bad. So that's why you want to have your things here. Anyways, I guess you could make a case that shorting would be better. Because if you put in a short here, right, and the price and then you put a limit at the date, if it's here, it just stinks. So that's why it's so important at this stat. Let's go back to normal, not extended hour trading. And if we zoom in on that Monday again, you look at my statistics showed that it was going to go down. The and so in this case, it's okay that after hours trading, the stock went down. But if my predictions were wrong, like my prediction said it was going to go up, and I entered here, and then the stock went down, I would take a big loss. So it's really, really important that if you're going to go long, a long trade, especially, that you have stocks that are 100%. For short trading, it doesn't matter so much, because if you put in a short here and the price goes down, and then the next day it opens up, you're going to get a big winner. So, in some sense, shorting the stock is better. So 607, that's okay. Does that make sense? 709 has two things against it. It's not perfect. It should be 7-7, but even if it was 7 and 8, a long buy is worse than a. If it's wrong on a long, it's a lot worse than if it's wrong on a short. Okay. Let's look at another stock, AR. Okay, you got 6, 7. Both of those are above 5. That's good. 6 of 7. That's better, but I would have to really go back and look at everything. 6 of 7. That's the same as before. So that looks like a stock. And we're going to go down to the next one, AXL. Okay. See, it says 4 and 3. Both of those are below 5, so you don't even look at that. And so it can go kind of quick. The next one is BHGE. 2 and 3. Those 2 and 3. So you just go through this list, and that's how you decide. Well, I hope that was helpful. Bye.